Hello friends, today we'll talk about investment. If you want to grow your money and secure your future, investment is a smart choice. In this video, we'll cover the basics of investment and give you tips on how to get started. Let's dive in. What is investment? Investment is the process of putting your money into assets or ventures with the expectation of generating a profit or returns over time. The goal is to grow your wealth and achieve financial objectives such as saving for retirement, education, or purchasing property. Common investment options include stocks, bonds, mutual funds, and real estate. Each investment comes with its own level of risk and potential return. By investing, you aim to beat inflation, increase your financial security, and build long-term wealth. Proper investment strategies can help you achieve your financial goals while managing risk effectively. Investment types. Investment comes in various forms, each offering different levels of risk and return. Stocks represent ownership in a company, offering high growth potential but also higher risk, as their value can change rapidly. Bonds, on the other hand, are a type of loan made to companies or governments, providing more stability with fixed interest payments, though they generally offer lower returns compared to stocks. Mutual funds pool money from multiple investors to invest in a diversified mix of assets, helping to spread risk and reduce volatility. Real estate involves purchasing property for rental income or future appreciation, which can provide steady returns but requires significant capital and can be less liquid. Commodities like gold, silver, and oil are physical assets that can serve as a hedge against inflation, but are often volatile. Each type has its advantages depending on your financial goals, risk tolerance, and time horizon. Risk or return. Risk and return are two key concepts in investing. Risk refers to the possibility of losing money or not achieving the expected returns from an investment. Higher risk often means a higher chance of loss, but it can also lead to greater potential gains. Return is the profit or loss made from an investment, and typically expressed as a percentage. Generally, investments with higher potential returns, such as stocks, come with higher risk. Conversely, safer investments like bonds offer lower returns but have a reduced chance of losing money. Balancing risk and return is crucial in building a strong investment strategy. Here's how to start investing. First, set your financial goals by identifying what you want to achieve with your investments, whether it's saving for retirement, buying a home, or funding education. Next, understand your risk tolerance to determine how much risk you're comfortable taking. Then choose the right investment options that align with your goals and risk profile, such as stocks, bonds, or mutual funds. It's also important to start small and invest consistently, even if you begin with a small amount, like through a systematic investment plan, SIP. Finally, remember to stay patient and focus on long-term growth, as investing is a gradual process that requires time and discipline. Common mistakes to avoid. When starting with investments, beginners often make a few common mistakes. One mistake is not doing enough research before investing. It's essential to understand the asset you're investing in. Another mistake is trying to time the market, thinking you can predict market movements. This is risky and often leads to losses. Lack of diversification is another pitfall. Putting all your money into one asset increases risk. Many also make the mistake of investing with emotions, like panic selling during market dips. Finally, not having a clear investment strategy can lead to poor decisions and missed opportunities. Thanks for watching. I hope this video helped you understand the basics of investing. Don't forget to like, share, and subscribe for more finance tips.